Jerome Powell's term as Fed chair has officially expired, and Kevin Warsh is taking the helm. If you look at the immediate reaction online, retail investors are frantically expecting instant, massive rate cuts to pump up the stock market. Add to that the intense political pressure, with President Trump publicly demanding immediate rate cuts and cheaper borrowing. Assuming a new Fed chair prioritizes stock market rallies to appease politicians is a dangerous distraction. It blinds everyday investors to the actual macroeconomic data driving the markets right now. This chart tracks the US 30-year Treasury yield, showing the rate violently surging straight above the 5% threshold. When long-term yields stay elevated, it's a flashing warning from the bond market. Investors demand higher interest because they don't believe inflation is under control. This 5% milestone proves the assumption that money will remain cheap is currently under siege. To understand the actual inflation threat, we need to look past everyday consumer prices at the grocery store and focus on the Producer Price Index, or PPI, which tracks the severe upstream costs hitting corporations. A major driver behind the recent PPI surge is the escalating US-Iran conflict. Violent disruptions in the Strait of Hormuz have sent global oil and shipping costs soaring. This chart shows the mechanics of cost-push inflation. Unlike a booming economy where people are eagerly spending cash, this happens when skyrocketing overhead costs, like raw materials and freight, forcibly push up baseline prices. If corporate costs skyrocket at the exact moment the consumer's economic engine dies and spending stops, you enter a true stagflation scenario. A supply-side shock causing stagflation leaves the central bank cornered. If they hike rates to fight prices, they crush a weakening economy. If they cut rates to save jobs, they risk prices exploding even further. This is Kevin Warsh's actual test. He has to maintain the Fed's strict independence, anchoring his decisions purely on hard economic data, rather than surrendering to intense political demands. This graphic shows two very different paths for rate cuts. On the left is a soft landing. Here, the Fed makes a controlled, systemic reduction in interest rates because inflation naturally cooled and the economy is stable. On the right is a hard landing. This is a panic-driven slash in rates because unemployment is actively spiking, corporate earnings are failing, and the credit markets are freezing solid. If Warsh applies a rate cut while inflation remains high, he risks a total loss of market trust and a collapse in central bank credibility. Right now, retail investors are making critical errors, actively losing money because they trade on emotional headlines instead of reading true market signals. The first mistake is blindly chasing market rallies the second you hear the words rate cut without verifying if we are heading for a safe soft landing or a dangerous hard landing. The second mistake is believing US Treasuries are a perfect safety net, ignoring the reality that rising long-term yields actively strip the market value from the bonds you already own. The third mistake is trusting TV pundits instead of tracking where the world's largest financial institutions are actually moving trillions of dollars. The true barometers you must watch are the 10-year and 30-year yields, the strength of the US dollar, gold breakouts indicating institutional panic insurance, and genuine corporate cash flow. Trading on a political narrative rather than data is the fastest way to suffer deep portfolio losses when central bank leadership shifts. You need to audit your portfolio today. Ask yourself if the stocks you own can actually survive a higher for longer yield environment, and whether they offer you a genuine margin of safety. To help you navigate this chaos, we created the free Stock Investment Masterclass at the Stewardship Finance Academy. We do not offer blind stock tips. Instead, we provide a consistent system to filter out the noise, identify the actual movement of global capital, and find businesses with sustainable cash flow. Before you go, I want to hear your take. Given the current inflation data, how many rate cuts do you realistically think the Fed will deliver this year? Drop your exact number in the comments below. Building a data-driven system is the only reliable way to protect your wealth when political pressure, global conflict, and new rate environments all hit the market at once. Hit that like button, subscribe to the channel, and click the link in the description to join the masterclass today. Stay focused and